I'm pleased to have Jason Culver here, Chief Credit Officer, NEDCO. Today we're going to talk about misconceptions in SBA 504 lending. Jason, good to see you.
Yeah, good to see you as well, Bob. Thank you.
So what's out there in the marketplace that people have a hard time grasping about 504 lending?
Yeah, we like to get out into the community and talk to bankers across the state. You've been here. It's a pretty wide state, and sometimes there can be misconceptions in different parts of the state where, we try to advertise, we try to get out there as much as we can, but some of those old misconceptions still flow through. And to be honest, it's hard to believe here in 2026 we're still talking about it, but there's some COVID misconceptions out there. Some industries that, yes, we did take a bit of a pause on at the time, but as of today, we are full steam ahead on those industries. Things like hotels, restaurants, where, yeah, those credits got a little tight back in the day, but as of right now, we're processing them just like any other loan out there.
Hotels are doing very well overall.
Yeah, in Nebraska, we don't get a lot of out-of-state travel. It's a lot of internal. It's a lot of related to businesses having their employees stay there, work-related travel. So we're kind of insulated from maybe some vacation spending. It's sort of a built-in number of travelers that visit and stay in our hotels. So yeah, we're full steam ahead.
Very good. What industries do you like? What is your sweet spot for lending?
Gosh, it seems like we go through phases. We went
I
through a
know
day
that's why.
we went
I
through
know.
a daycare phase, and it seemed like every daycare was applying all at the same time. And certainly, like I just talked about hotels, we probably do more hotels than any other industry.
Sure.
So we definitely like those. And then, oddly enough, we've seen sort of a resurgence of event centers, getting a lot of event centers around the state. I don't know, must have been a lack of sufficient capacity in our bigger markets, Lincoln and Omaha. So we've been underwriting quite a few of those lately. But honestly, anytime I try to summarize the types of loans we're doing, it just seems like the industries are so far apart that you get one that you never even thought of was out there.
Sure. And 504 lending is very attractive. What are the interest rates these days?
Yeah, so we're sitting just below 6%. That's both on
Oh,
20 and 25 years,
yeah.
and even lower for small manufacturers.
Let's talk about the small manufacturers. It's a big push by the current administration. What is your credit underwriting philosophy for those manufacturers who are bringing jobs to Nebraska in American-made products?
Yeah, like you said, there is a very big push from the current administration, and that's coming through in, fee waivers on some of the upfront fees. The guarantee fee, instead of half a percent, it's reduced to zero, and then the interest rate being 25 basis points less. So there's a big push right now, and 504 is probably a very big component of what we can offer those small businesses for financing. They typically have higher equipment costs, and most conventional lenders out there, they don't like to go too far with equipment, whereas we can go out a full 10 years on it and fix that interest rate. So that's a huge incentive right there. Plus, with the decoupling that we'll talk about in a little bit, where they can actually maximize their SBA lending more than they could in the past.
Jason, explain to me, you sort of threw that in there. Obviously, you know it and I know it, but tell equipment financing. When we hear 504, we don't think about that too much. How does equipment financing fit under the 504 lending program?
Yeah, if I was to ask 10 bankers, probably all 10 of them would say, well, you do real estate, and
Right.
wouldn't really think about the equipment component. But actually, it's a huge draw, the equipment component. Equipment is not special use, so that's great. We can go up to 90% financing on it.
Nice.
Again, we're going to fix our interest rate for the full 10 years. And to be honest, if you can prove it's got a longer useful life, I've even gotten equipment approved at a 20-year term. So when you
Nice.
talk about spreading those payments out, it really affects the cash flow.
Well, you telegraphed the best for the last, decoupling.
Hmm.
This is huge news. In the past, $5 million was the cap for 7A and 504. We can now throw that in the misconception category because the administration just announced, no. We're going to go 5 million 7A and you can go 5 million 504. Tell me more about that.
Yeah, that was a great surprise. I wasn't sure. We've heard the rumors that they were going to do this, and yeah, that news came out that we can finally utilize a full 5 million on the 504 side and a full 5 million on the 7A side. So if you've got somebody who's, say, buying in an existing business and they need funds to buy business operations, well, I can't help them on the 504 side, but they could always go out and get a 7A loan for that. Unfortunately, that 7A loan reduced how much I could lend them on the 504 side. So it kind of became a fight between the two programs to maximize their dollars and which was better, more on the 7A or the 504. Now we can be independent. They can go get their 7A for up to that 5 million, and we can do another 5 million on the 504 side for them.
Plus, tell me more, especially manufacturers, they can get more than 5 million on the 504. Tell me about that.
Yeah, that's true. So they can actually go up to 5.5.
Mhm.
And on top of that, they can actually do multiple 504s to do, say, real estate and an equipment one on the side. So you could actually go above that 5.5 million.
And now you're talking nice capital stacks. The 504, excuse me, the 7A can be working capital. SBA is calling it light equipment. I don't know what light equipment is, but in 504 we go heavy equipment, and we can
Hmm.
have one, or we can have another facility, a separate project down the road at 5 million plus 5 million plus 5 million. So you're talking about some nice capital access for these manufacturers, Jason.
Yeah, you are. And the other side of that is, a lot of the banks we work with are more state or regional type banks, and they're up against lending limits. Whereas, if they were to try and do this conventionally, they're holding that all on their books.
Right.
By doing this, they get a partner with SBA to drive down their loan to value and maximize how many of these, projects, expansions, equipment they can keep doing with that borrower.
Great. Well, this is actually absolutely great news. Hey, Jason, what a great way to start off this series of NEDCO news. Great news. Hopefully, we've cleared up some misconceptions, which were just as of a week ago. Bottom line is a lot of capital is opening up for Nebraska manufacturers and other businesses. And I'm glad that you and NEDCO are part of it. Thank you very much, Jason.
Yep. Thanks for your time, Bob.